Sherwin-Williams Management 7160, Section M51, Team 1, presented by Sharronica Jackson,
Shreya Chaudhari.
Tommy Davis.
Charles Tyus.
The Sherwin-Williams Company was founded over 150 years ago by Henry Sherwin and Edward Williams. The company, headquartered in Cleveland, Ohio, is known as America's paint company and is the largest producer of specialty coatings, paints, and varnishes in the U.S. The company employs over 64,000 people, and its branded products are sold throughout more than 5,000 company-operated stores, as well as independent paint and hardware stores, big box stores, and home improvement stores. The company's vision is to be the world leader in the paint industry by being committed to satisfying customer needs through quality products, excellent service, and a highly trained and professional workforce. The mission of Sherwin-Williams is simply to cover the earth. Sherwin-Williams believes that what is worth doing is worth doing well. Their mission to cover the earth, to become the world leader in the world of paint, began over 150 years ago when the company was founded and established a global legacy of creativity, collaboration, and innovation. The company continues that legacy today by looking ahead and innovating for the future. With stores, distribution centers, and facilities spanning the globe, they can deliver the best in paints, coatings, and related products to customers all over the world. The executive leadership team is led by John Mauricus, who has served as Chief Executive Officer since January 2016 and was appointed Chairman in January 2017. The executive team at Sherwin-Williams has a history of working in various IT and legal positions at different companies. They have a wide range of experience in different industries and hold degrees from Carnegie Mellon University, Vanderbilt University, and the University of New Hampshire. The board of directors at Sherwin-Williams is made up of individuals with various experiences in the company. Some have been market managers, assistant market managers, management trainees, and sales or management interns. They all have different educational backgrounds, but most notably, they all have experience with Sherwin-Williams in some capacity. The leadership team at Sherwin-Williams has experience in a variety of industries, including IT operations, shared services, programming, and sales. They also have received education from some of the top universities, again, including Carnegie Mellon, Vanderbilt, and Ohio State. This team is dedicated to providing the best possible products and services to their customers. As a result of an $8.9 billion acquisition of the Valspar Corporation, global paint and coating supplier Sherwin-Williams created 3 new reportable operating segments. Previously, there were 4 reportable operating segments, including the Paint Stores Group, the Consumer Group, Global Finishes, and the Latin America Coatings Group. The 3 new operating segments include the Americas Group, the Consumer Brands Group, and the Performance Coatings Group. The Performance Coatings Group includes Sherwin-Williams Global Finishes Group and Valspar's Coatings Group, as well as Valspar's Automotive Refinishes business. The Global Finishes Group supplies finishes to the wood furniture industry, as well as coatings for various metals and plastics, including furniture made with these materials. The Americas Group includes Sherwin-Williams' previous paint stores group and Latin America Coatings Group. The Consumer Brands Group includes Sherwin-Williams Consumer Group and Valspar's Consumer Paints segment, excluding Valspar's Automotive Refinishes business.
Now, talking about different types of products that Sherwin-Williams provide. It provides paints. The company offers wide range of paints, including interior and exterior paints, primers, satins, and coatings for commercial, industrial, and residential use. It provides coating services, various coatings such as industrial coating, protective coating, automotive coating, and it also provides equipments. It provides color consultations and digital tools, including mobile applications and online color visualizations that help customers visualize their project before it takes a shape of reality. And talking about the services, Sherwin-Williams is globally involved in different services from home painting, professional painting, from painting for coil extrusions, general and wood industries, aerospace, automotive, painting and coating, protection and marine, packaging, and high performance flooring as well. I'm talking about the Potter's Five. So the threat of entry into painting and coating industry is pretty low. It has higher barriers of entry. There is higher competition. The industrial painting and coating industry is highly competitive, and there's already many established companies offering these services. Starting an industrial painting and coating company requires a significant amount of investments, equipments, and supplies. Additionally, it requires technical expertise, such as understanding types of coatings and their application methods. Also requires regulatory compliance with the government, with environmental sectors, with licensing. And many industrial painting and coating businesses specialize in particular areas. Therefore, it is a very mild to moderate risk of threat of entry. Now, talking about substitutions, there is a very low risk when it comes to substitution. Majority of people prefer paint over sticking a different form of like tile or wood to their walls. So they're very low risk of substitution. Talking about the bargaining power for buyers, the Sherwin-Williams company has a large customer base, including both professional contractors and personal consumers. Though its price is expensive, its brand's reputation and quality products has given that pricing power. Therefore, buyers have moderate bargaining power. Talking about the bargaining power of suppliers, Sherwin-Williams has multiple suppliers for their raw material. Therefore, very little risk for dependency. However, the pandemic has affected the viability of raw materials, which it has all around the world to all the companies, therefore causing disruptions in their sales and profits. For Sherwin-Williams, bargaining power of suppliers is moderate to high at this time. And talking about the industrial rivals, currently PPG and AkzoNobel are the closest competitors to Sherwin-Williams. For 2022 revenues, Sherwin-Williams stands at 22.2 billion and PPG stands at 17.7 billion. PPG had a much better growth in their revenue versus Sherwin-Williams was pretty stagnant in their revenue compared to previous years. Therefore, currently industry rival risk would be moderate to high. Talking about the cost leadership strategy for Sherwin-Williams, using cost leadership strategy, they have used their competitive advantage as cost leadership strategy, and its primary generic approach is across large customer sector. Sherwin-Williams provided regular types of discounts to promote more affordability and target middle-class consumers when it comes to their costing. Even though their products can be expensive, they continue providing resources that enable consumers to access their product.
All right, so now we're going to move on to the SWOT analysis for Sherwin-Williams. Some beginning remarks for that. SWOT analysis is used to identify internal and external factors and assess whether those factors are favorable or unfavorable. Throughout the course of this conversation, it's important to remember that SWOT analysis are a starting point for discussion, and they're limited in nature, particularly in a changing environment. So, as for a brief overview of Sherwin-Williams SWOT, Sherwin-Williams' strength lies in their global presence, their strategic partnerships, their strong and reliable dividend performance. Their weaknesses lie in lagging diversification and slow economic adaptation. Some opportunities for Sherwin-Williams includes their R&D potential and continued global expansion. A few threats that Sherwin-Williams faces includes the European market weakness and Chinese governmental interference. So to take a deeper dive onto Sherwin-Williams' strength, we can see here this image in the top left corner of the slide. We can see that Sherwin-Williams has a notable presence in North and South American markets, European and Chinese markets. We can see that the bulk of Sherwin-Williams' global presence does lie in North and South American markets. However, there is a very notable market in Europe as well as in China, which for Sherwin-Williams, the China market has been a new expansion, but it's notable for its difference from the European and North and South American markets. You can also see a single facility with the consumer brand group in the north right area of Africa. So a small amount of expansion in there. Of course, there wouldn't be any sort of brick and mortar presence at this time, aside from the facility itself. Another strength, Sherwin-Williams derives revenue through their own branded stores, as well as strategic partnerships with folks like Lowe's, B&Q, Walmart, Orgill, Menards, and Do It Best. So these partners will stock various Sherwin-Williams products, and that will lessen the burden on Sherwin-Williams to move their products and generate revenue through brick and mortar stores. Finally, Sherwin-Williams boasts 44 years of consistent dividend increases. You can see in the bottom left corner of this slide some more recent years of their dividend increases. Just as a general note, consistent dividend increases generally signal to investors that the company is confident in its position. It can potentially show that the company doesn't know exactly what to do with their money, but given Sherwin-Williams' expansion in R&D and all of their operations, that really just doesn't seem to be the case in this. So it's definitely signaling confidence in its position. So some weaknesses for Sherwin-Williams. So they're currently lagging behind other US companies in promoting underrepresented groups to management. So we can see in this infographic at the bottom of the slide that women in management, they were at 26% in 2020. And Sherwin-Williams' goal is to be at 30% by 2025. However, the current average percent for female managers floats around the low to mid 40 percentile rate. So they are considerably behind on that. Additionally, their goal is to increase underrepresented racial/ethnic groups in the US management roles to 30% by 2025. As of this year, the current average percent for underrepresented groups is around 33%. So their goal is actually below what the average is, this year. So they really need to pick up the pace there as well. Sherwin-Williams has demonstrated poor adaptability to rising costs. They have posted sales lower essentially than were forecasted. And when the CEO remarked on this, CEO essentially said Sherwin-Williams is struggling to keep up with both cost inflation and just limited raw material availability. So they're also having some supply chain issues. And they're also struggling to adapt to slowing economies in the different areas that they sell in. So some opportunities for Sherwin-Williams. Sherwin-Williams' considerable investment in R&D as well as their impressive employee tenure will likely produce innovative products going forward. So you can see from the infographic below that their average R&D employee tenure is around 10 years. So the average engineering tenure for companies like this is around 5 years. So, they're about double that, and that's really going to allow them to take on broader, more impressive R&D projects and possibly get a tech advantage and an innovation advantage over their competitors. Few competitors have entered the African market. As a globalized company, Sherwin-Williams is primed to efficiently enter this market before other competition. And as we saw on a previous slide, Sherwin-Williams already has a facility in the northeastern part of Africa. And so they already have a small foothold there. And it would be reasonable for them to use that foothold to expand into those markets before competition can. So Sherwin-Williams business has suffered in China due to COVID lockdowns. However, recent relaxation of those protocols will provide Sherwin-Williams an opportunity to expand their business revenue there. We can really see how the Chinese economy is revving back up, and it's going to provide Sherwin-Williams the opportunity to increase revenue there. Finally, we're going to take a look at the threats. So the current threats to Sherwin-Williams include issues going on with the European market. The CEO specifically noted the ongoing war in Ukraine, as well as the housing market in Europe. It just has the effect of really slowing down sales in that region. And they are having a hard time adapting to that. And there is no clear signal when either problem will end. So that will be a continuing threat. Additionally, due to the politicized nature of the Chinese economy, Sherwin-Williams will have to endure more government control of their operations in China. As previously mentioned in the last slide, Sherwin-Williams already had issues ongoing during the COVID lockdown. The power of the Chinese government to control businesses within their borders is very high, and it is conceivable that Sherwin-Williams will have other events down the road in their Chinese markets that will challenge them.
All right, we're moving to our next part of our presentation, the current news. First bullet point is the acquisition of German-based specialized industrial coatings holding. The business's portfolio of solutions includes foil coatings as well as radiation cured and water-based coatings for the board, furniture, and flooring industry. With a presence in Europe, Asia, and South America, the business has approximately 220 employees and annual sales of more than 91.5 million euros, and will become part of the Sherwin-Williams Performance Coatings Group reportable segment. So that piece where it's mentioned that they're going to be part of the Performance Coatings Group, that's going to be important for our recommendations. The next bullet point is the acquisition of Industria Chimica Adriatica. This is an Italian designer, manufacturer, and distributor of industrial wood coatings used for kitchen cabinets, furniture and decor, building products, flooring, and other specialty applications. The acquired business has annual sales of more than 150 million euros, with sales and operations globally, including production facilities in Italy and Poland. The ICA has approximately 600 employees and will become part of the Sherwin-Williams Performance Coatings Group operating segment. So that's, once again, that's another part that we need to focus on, is the Performance Coatings Group for our recommendations. The next bullet point is AkzoNobel acquires the Chinese decorative paints business from Sherwin-Williams. The business manufactures and sells decorative paints under the Huron brand name in China and has an annual revenue of approximately $100 million and employs approximately 300 people. The transaction is expected to close in the second half of 2023, pending any customary regulatory approvals. So Sherwin-Williams here is divesting part of its business that is centered in China. The next bullet point is they're expecting a challenging demand environment in 2023. So according to CEO John Morkis during an earnings call in January. The company is anticipating a deceleration of demand for their paint products, mainly due to the US housing market, such as slow existing home sales, and then the continued pressure from high inflation. All right, now here are our recommendations. First recommendation that we have is for Sherwin-Williams to continue pursuing joint ventures in Europe to increase market presence. And maybe not just so much joint ventures, but also acquisitions as well. If you can see on the map above, Sherwin-Williams has 57 branches and 24 facilities within the EMEAI, that's Europe, Middle East, and the Asia interior. There's opportunity there, but we're looking from an industrial standpoint. So currently, Europe is experiencing a sluggish housing market with housing value falling and home sales decelerating. So the opportunity here is to hedge against the challenging demand due to housing by focusing their portfolio on industry. So kind of like what we were talking about in our current news, most of the recent acquisitions have been in Europe and will be operated by Sherwin-Williams Performance Coatings Group. And the Performance Coatings Group, they focus on industrial customers. So that we recommend that they continue acquiring businesses, doing joint ventures in Europe to hedge against the challenging demand, primarily shifting our focus from housing customers, DIY customers, but moving our portfolio and focusing our portfolio on the industrial side. I think that will help Sherwin-Williams weather the 2023 storm. The next point is they need to aggressively pursue and establish sustainability into the culture of their company. So sustainable products and operations is a trend for consumers when considering purchasing products, and Sherwin-Williams is lagging in their ambitions and progressing in comparison to their competitors. For example, AkzoNobel, they have a goal for 50% reduction in carbon emissions by 2030 and 100% renewable electrical usage in their operations by 2030. Their progress right now currently is 28% reduction in the carbon emissions, and then they're already at 100% renewable electrical usage in their Europe and North America operations. Now, here's the comparison. What Sherwin-Williams goals for carbon emission reduction is 30%, and they don't even have a time frame. So AkzoNobel has a time frame for 2030. We don't know what Sherwin-Williams goals is. And then for renewable electrical usage, they want to be at 50% by 2030. AkzoNobel wants to be at 100%, and they're already there. So here's the progress that Sherwin-Williams has made in their sustainability efforts. When it comes to carbon emissions, we don't know. We don't have a percentage, and that's kind of alarming. It kind of shows that maybe sustainability is not part of their core values. They may talk about it, but it's not really fully bought in by the entire leadership and company. And then their renewable electrical usage is at 0.06%. So we got AkzoNobel, one of their top competitors. They can easily brand how sustainable and how hard they're working towards sustainability. They're already at 100% renewable electrical usage, while Sherwin-Williams is at 0.06%. In today's culture, sustainable products are our focus. And we think that Sherwin-Williams will need to push for creating better goals, creating buy-in in their culture of the company and pursuing them in order to stay competitive. This is something that consumers are looking at, not only from a discretionary standpoint when it comes to DIY homeowners, but even in industry, people are looking more towards sustainable products and operations.